Hey everyone, and welcome back to my channel, Girl Gone Crypto. I'm really excited for today's guest. I've got Pierce Crosby, the GM of Trading Views. So, Pierce, thank you so much for coming on the show today.
Hey, Leah, thanks for having me.
So, I'm excited to talk about crypto trading, which anyone who's been on my channel, that's not a topic I've talked a ton about. Trading isn't something that I really do a lot of, which is why I wanted to bring someone on that could kind of give a little bit of guidance for that, kind of that audience of people that are interested in starting to dabble into it and learning more. So maybe just to start out, tell us what TradingView is and what kind of tools and things that you guys offer for people using your platform.
Yeah, well, first, thanks for having me, and I'm glad to kind of provide some context and advice for folks who want to get started. The trading and investing world is a pretty rock and roll place, so it's always good to get a lot of information before you get started. So we at TradingView are very much a neutral platform, trying to provide whether it's tools, research, data, and your peers to connect with, to chat about investing and try to get a better sense of, maybe even if you're not investing, just understanding what's happening. What are the current market trends? What are things that people are investing in, and get their opinions back and forth. So we've been around since 2010, so going on 10 years now. We have probably 250 employees around the world, so we've scaled up pretty significantly over the last couple of years. And I spearhead our U.S. operations out of this beautiful home office, but usually we have an office on Union Square, so you can find us there. We're readily available to chat with people, hang out. We try to throw get-togethers and stuff for people who are both experienced investors, but also people who are just getting started.
So one thing that I think is really cool about you guys and what you offer is, you've got this whole kind of array of tools. I think every crypto trader I know uses you guys, but in addition to that, you've got this whole live streaming component where people can connect and learn. So maybe tell us a little bit about that live streaming platform you have as well.
Yeah, sure. So we saw actually our chief strategy officer, Stan, who's been kind of at the forefront of this kind of financial education side of the business. He saw Twitch. He's a big fan of Twitch, and basically saw them in their meteoric rise, probably 2016, 17. Realized that there was kind of an opportunity to do something similar, but do it for the investing world. And more or less, what we thought was, the premise was, why don't we do something like Twitch, but at the same time, for those who are experienced in the investment world, usually a CNBC or a Bloomberg or maybe BBC or something like this are kind of the de facto standard for financial news. We thought, why can't we just open this up so that people can actually create their own channels, share their own ideas, and then build their audiences so people can tune in daily. We have streamers from all over the world, but most commonly people start a stream every day, and maybe you have 20 or 30 people watching. But we have some that do, I don't know, 1,000 people watching concurrently on a given day. And we just launched this in February, March, I think. So it's relatively new. The product is still kind of in a beta mode, so if anybody wanted to come on, you can definitely start by watching rather than streaming yourself. We're trying to keep it kind of curated. But if we think maybe a couple months down the line, we'll hopefully open this up to everybody, so that if you're a trader and you want to hang out with your friends, we'll create kind of these private video channels, or even public video channels, where you can catch up or talk about what's happening in the market. It's like kind of a place for people to exchange ideas and collaborate over real-time video, which we haven't seen before.
Oh, that's awesome. And one thing that I want to kind of dive into maybe a little more is the like 101 person that might be watching this, right? So if
Yeah.
someone is brand new to wanting to learn how to trade crypto, what are the first things they need to know and that they need to pay attention to?
Yeah, well, much like any asset class, investing in itself is is a journey. It's not a destination. And I always tell it to people. I used to work in the more traditional equities world at my previous company, and we would get tons of people who would come straight to us and say, what do I buy? What do I buy? I think for the most part, the best advice that I could give in terms of folks getting started is soak up as much information as you can. Always get a lot of sources to kind of validate your opinion. Never use a single source, right? Because on the internet, as you can imagine, people see an idea or something. There's like a tweet or maybe a news alert from Reuters or something like that, and they'll say, "Oh my God, this must be like an investment idea." I think you really got to like take that instinct and slow it down, and really think about, is this something that you're in for the long term? Crypto in its nature is supposed to be kind of more of a long-term investment strategy. So I think the same rules apply as they might to a public company or something like this. If you really think that this technology has a future application, and that, maybe not today, but in 5 years, there could be real value in that, try to reverse engineer what you think the fair value of that is. And oftentimes you'll never be able to, analyze it like you will a balance sheet for a traded company, but you can essentially try to see what are the core elements that make for something that is investable. For the most part, from what I've seen, at least in the investing world, is that a lot of companies kind of shill, potential applications, et cetera. But then you kind of dig into some of the white papers, and a lot of it is just, I guess, still built off of one of the main currencies, right? So for those that want to get started, I think my number one rule of advice would be, do not go to edge case currencies, just because the likelihood of those being zeros is extremely high. So risk tolerance is obviously huge, and even if you're getting into crypto, you should still have some parameters around how much you're investing in very edge case assets versus kind of the mainstream. I think that it's a much safer bet long term to kind of invest with the pack, if you will, or invest where other investors are putting their money. So if you're looking at, daily volumes is a great indicator that we've used in the crypto world for a long time. Trading volume is a great indication as to how many people are actually interested in this. And I think in a lot of those very edge casey type products, you definitely have some people who are trying to trade, things that don't really trade that often. So I think that that's a good start usually. In terms of our platform, obviously we provide historical charting, historical data around a lot of these crypto products. It's important to note that we actually take the stance of not listing a lot of assets on TradingView. And that's because we actually don't think that we as a company feel confident in terms of marketing stuff like this to people who might not be very aware as to what they're getting invested in. And there's a lot of sites that maybe don't have those parameters, but we have to be very careful because we're a global company, and we really think that it's somewhat our part to really kind of define what we think of as investable from a crypto perspective. So but yeah, browse assets, obviously use networks. We have a very strong social network on TradingView, and a lot of them are very opinionated. So just soaking all that up, but then ultimately feeling confident that you can make a decision yourself, and you're not relying on some single person's opinion. I think that's usually the way to go.
So you just talked about, getting sources from, or information from multiple sources. Where do you think is the best place for people to go to start finding some of these different sources? So to go to the TradingView community, to find YouTubers, like what would you kind of recommend in that sense?
Yeah, I've seen an amazing amount of analysis coming out of YouTube, which even a couple of years ago was totally new to me, just in terms of a place to go for information. I think I'm actually trained as a journalist, so I have this opinion that there are there's a lot of value to platforms or websites that have no stake in the game. And so a lot of publications in the crypto space have some implied interest in an asset or something like this, whereas some are neutral parties and basically have no stake in the performance of an asset over time. And even if it's not explicit, there may be some implicit relationship with a publication and either a currency or a product, et cetera. I think that for the most part, the advertising relationship is usually pretty straightforward, and I think people keep that pretty far away from influencing the editorial side of things. But there are a lot of publications that I see that basically may go a little too far around promoting something because somebody happens to be paying them money to do so, or what have you. So it's always tough. But yeah, generally speaking, I think Into the Block, I don't know if you know, they're really strong in terms of their approach to markets. I'd say, trying to think of who I'd read for the most part. Funny enough, Coin Market Cap for the longest time has been kind of a bellwether in terms of just getting some very high level analysis on assets overall. And there's a couple ones as well that basically look at searching hash rates and kind of more macro statistics about currencies. I think that those are always great as a resource, at least to filter where to start or what to look at. And I think, again, if you don't have these macro filters in place, you can very much all of a sudden focus your effort on this little currency, and you're searching it in Google and everything you find is bullish and positive and all that, but you're not looking at the big picture, which I think a lot of people get lost in. Yeah.
So you mentioned earlier, you were talking about risk profile, and obviously with crypto trading, there's a huge upside to make big profits, but when you have that, you also have the potential for the downside and losses as well. And emotionality, I think, especially with new traders, can be an issue sometimes, really knowing when to sell and when to make those transactions. And so what tips would you have for someone that's new to trading to kind of keep that in check and to make smart decisions?
Yeah, I mean, so the 80-20 rule is something that's been used by investors for a long time, where 80% of your investing is put in something that's a relatively safe kind of store of wealth. So we can look at it in two different ways. Just depends on how your investors or how your brand new traders want to think about investing. If we were looking on a cross asset level, I would say that probably some of the most safe assets are going to be treasury securities, the S&P 500, things that may have a longer horizon of stores of wealth. But if you're going full crypto, so if you're building a portfolio of just crypto, then the same 80-20 rule would apply, right? So 80% of your investing capacity is going to go towards things that you might not have insane gains on a daily basis, but you also limit your downside. That 20% is really, I guess, kind of the gambling aspect of an investor's portfolio. And I think a lot of people, what drives a lot of people towards investing is this idea that I'm going to make millions of dollars. But at the end of the day, the best traders I know that do this for a living, they make a couple grand here or there, and it's enough to pay the bills, but it's very consistent, right? So you're not looking for those one day, 150% returns. If you can make, a percent or two per day, compound that over a year, and you're actually doing it insanely well as an investor. And so I think that you always got to keep that risk tolerance in mind. And again, if this is all play money for you, like if you have an investment account where you just want to give it a shot and shoot for the moon, by all means, but just keep in mind that there's a very high likelihood that you could also blow up your account overnight. I mean, just for context, in a previous life, I did that twice. So I think I understand what you can do and how to avoid it. And I think that's the biggest thing is, the 80-20 rule to really keep yourself in check. Yeah.
So when someone is starting to research trading and looking into it, there's a lot of different styles of trading out there, right? So there's day trading, swing, position, leverage. Like that could maybe feel a little overwhelming. Are there certain types of trading that you think are best for beginners?
Yeah, it's, in fact, one way to think about it is that investors can really graduate to be traders, but usually it doesn't work the other way. So traders are, by their nature, people that are, on their computer every day making position changes. Whereas if I'm an investor, I can be putting money to work, in 2 weeks, 3 weeks, 4 weeks. So a specific strategy for traders, generally in the equities world, which is where I'm most familiar with, very simple kind of momentum-based strategies or general growth strategies are usually the most preferred, I guess you could say. Probably trend following in general, where you see kind of a large amount of interest over time, and that's justifying kind of the long-term value. And potentially you can pick up percents, riding something up, but potentially not being in it for a long-term position, like you might with the 80% of your portfolio, like we talked about. So I think that's probably a good shot, just to keep keep kind of with the herd, if you will, rather than thinking about it as people that are trading each individual movement on a given asset. You can wipe yourself out pretty quickly. And yeah, if you don't keep your portfolio in the green for every daily return, it can actually really impact your trading psychology as well, because you start losing every day. You start thinking about, okay, am I doing this right? Often people that lose every day start trading at a higher leverage, or trading with less kind of risk management in place, because they have to make up the losses that they've already eaten. And so it's very important that, even if you make an investment and it loses money on a given day, you have to think about it on a more long-term horizon. And so I always condone kind of people slowing down, thinking about kind of trading. If you want to be more active in the markets, maybe trading on a weekly basis, maybe trading on a monthly basis, but really trading intraday is extremely tough, and so it requires a lot of discipline, I guess. And so to start with maybe a less aggressive approach, and then if you're good at it, obviously go bigger, but really starting with a more kind of modest approach, so that, again, if you want to be in this for the long term, you can't wipe yourself out, right? You can always come back tomorrow. But if you're putting on 20x leverage on your portfolio, the likelihood of you being around the next week or two is probably pretty low.
Well, I hope that people that are watching this take that voice of reason, and you're right, it is just so much smarter long term to really slowly ease into it, especially, like you said, you've had a couple of instances in the past where your portfolio has taken a major wreck, and you definitely learn from those moments, but hopefully people don't have to have those moments to learn how to.
Yeah. A lot of times people don't learn until it actually happens to them. Everybody in especially kind of the more traditional trading world, everybody has those crazy stories of, that one day they woke up sweating and, they turned over and looked at their portfolio and surprise, surprise, China devalued its currency or something and the whole world blew up. But, if people can, take a lesson from my book, at least, start slow and start conservative. And then if you're, seeing that you can actually do this relatively well, limiting your losses, obviously putting in stop losses always, and thinking about, how you can allocate maybe a little bit more, maybe get a little bit more experimental with the assets that you're trading. I think those are all good rules for the road, for sure.
Well, Pierce, thank you so much for coming on the show today and just giving a really well-rounded overview of how people can get started, where they can be learning more, and what kind of mindset and approach they can take into this. So if people want to start using TradingView, where can they find you guys online?
Yeah, I mean we're on Twitter, Facebook, etc. So you can always follow. We have pretty active channels on Facebook and other social platforms. But obviously, TradingView.com. It's free to sign up. You can use the tool as long as you want. We don't ask a dollar. We're not one of these services that give you 30 days free or anything like that. You can literally just use it whenever you need. Yeah, start there. Feel free to send me a message personally. You can find me on Twitter or Facebook or TradingView as well.
Awesome. Well, thank you again so much, Pierce. It's been awesome chatting with you.
Yeah, thanks, Leah.